Hello guys, glad to have you on board again today. Real quick update on our weekly reference schedule, which is basically we're still closely looking at the gold market and the Apple stock itself as just a reference basis, not to trade on these assets because, well, gold is too late to trade now. You should have bought on the supports, but it's very important to look at how fast we would be eventually moving toward the resistances. Have a look at the weekly briefing if you do not know what I'm talking about. Anyway, we're still not yet weekly candle closed, but we're heading closer to this. And for now, it looks like gold has been doing a nice week. We've gapped up and held on, and yesterday kind of confirmed this thing. Even though we are now trading above the resistant context, meaning that the bulls definitely have pushed up their momentum. I'm going to let you know a bit more about this in the future, but I finally found some tricks to blow up the resistances that I had on the Pine script, which is the technical language used by TradingView to code indicators. I had a bit of a problem over the last month facing some limitations, but somehow I find my way out of this by thinking outside the box. So I'm going to release a pro alert update with this very nice dashboard stuff. Okay, so just back testing a few of these things before releasing, but should be done throughout the weekend or eventually next week. Today is going to be my focus on building BNB review. Yesterday I have released Solana for you guys, so I'll try to push up with this ASAP so I can terminate this series and move on to the next stuff. Though in the meantime, I'm closely looking at gold. Are we going to reject this resistant context or not? This is just a market that has been breaking trend lines inside the bigger range. Remember that the bigger range is in the weekly reference chart time frame, which is a trend. Okay, so understand that the probability of breaking resistances is significant. Also understanding the fact that we could very well build a third range boundary, pretty much being aligned with the previous one. So the area, the speculative area, is around 1950, and in that perspective, this is where you need to pay real close attention to. Though my only matter is how fast do we get there and what happens out there. So I'll be monitoring this to know if we're going out there by next week or if we consolidate a bit until we find the strength to get there. So the actual momentum on gold is important. On the opposite way, Apple do have the same momentum importance, looking at the fact that this is the most speculative asset out there. Very dangerous price structure for those who are reversal traders, but don't ever dare trading this thing. Just understand that the next support on Apple is out of these levels. This is where you find the trend channel, and understand that this is 4 to 5% lower. So if Apple were to somehow shift one way to the downside, one stair to the downside, certainly not the end of the world for this stock, but understand that this is just a 5% move, and 5% move on the big assets like Apple means that just the S&P 500 will take a 0.30% drop just all by itself, just due to Apple's 5% drop because of the massive weighting that Apple has. So I've always told you that this could lead to some complications if we have downside accelerations of Apple, because it's just overweighted in every ETF or whatever. So big danger on Apple. But once again, these are risks. That doesn't mean they will show up. That just means you have to look at it. Okay, so no big deal for now on Apple, but yesterday's session, not a good sign. Today's going to be very interesting. On a weekly basis, well, it's still going negative, even though everyone thinks that this is going to go all-time high anytime soon. Well, I still believe that there's going to be a disappointment at some point, and when this thing will start to break these kinds of trend lines, it's not going to go pretty. Okay, I've always made it clear, when we terminate that thing, this is not going to be anything else but a bloodbath. So don't buy Apple, don't sell it, just let it play its game. Okay, this is the matter. So for now, all we have is a mixed feeling, but still Apple is headed down and gold is going up, which is exactly what I said. This is the quality I wanted. Gold has been massively oversold for too long now, and Apple has been overbought for way too long. So if there is finally what I wanted, which is a quality move, that means money will ripple out of overbought crazy assets like Apple, and we'll get into more quality oversold assets like gold. And that will be the sign that the market is finally terminating with this absolutely bullshit Tina rhetoric. And in that perspective, we'll get the quality move that I wanted, meaning that quality assets will be bought and shitty assets will be sold, or overbought assets will be sold. People will run into quality assets that truly deliver potential over the couple of next years, okay? Though in that perspective, this is also going to terminate a weekly cycle. So what that means is that for the crypto market, there's very likely going to be a rebound on quality assets, and I very well always told you that I have my personal favorites, you can have yours, but my personal ones are, I don't think anyone should be out of Bitcoin or Ethereum in this run. These are the most quality assets with the best risks to rewards ratio. And when we've seen how hammered they have been over the latest few weeks, well, I definitely think that we've made a bottom. The question is, how do we gonna recover from this? Out of the 4-hour charts on ETH, I tend to believe that we're definitely doing what I thought we would do, meaning that we're immediately recovering supports, kind of pullbacking by flat consolidating, but I definitely stand for what I'm going to say. I think next move for ETH is to go for $1,000 and a like. It's probably and will eventually break out of this. You have to understand that these ranges, these big daily ranges we're into, are very much mature, meaning that we have crossed these levels without volume and without bringing any such a thing as liquidity. So don't get me wrong, getting to 3,700 is not necessarily going to bring any such a thing as a resistance. And there could be rapid acceleration out there. There is no resistance on assets like ETH. These guys have opened doors to all-time highs now. The question is, how fast will we get out there? And that mostly depends on the demand side. We've studied supply. There is no supply on ETH. There is no supply on Bitcoin. There is a huge problem of supply crunch, meaning that if there's just a little bit of demand, there will be not enough coins for everyone to grasp. So be ready for a wild ride on the quality assets. They might have sent some bearish price signals, but the volume never said the same story. The volume have always lied. These markets have been derivative trading when people will care about buying mid-term to long-term trends, which exist on this thing. When people will realize that we might not have sold that much on those assets, they will want to buy it, but there will be not enough things to buy for everyone. So understand that thing. I've always made it clear. You guys often look at prices, but do not understand the underlying structure of it. So this is why I've always warned you. There is huge problem with what the prices have said and the true story that I see as a professional trader. The prices have lied recently. And when people will realize, if of course that's the real story, they will finally realize that we should never have broken those supports and that we should never have done such a thing, that this was just a wrong footing structure to kind of flush the weak hands. We should never have retraced down to the 4K level, which means we can get there real quick. I don't think there is enough liquidity to be dealt with in this area, so pay real attention to the potential short squeeze patterns. This can look pretty damn stupid. I will just try to make things real clear. If you're now betting and gambling on the fact that, well, you can buy there, put a stop loss there, and turn yourself a billionaire if you would go right up 4K, well, that's as dangerous as it could be. Understand that market makers will just go for this, okay? So leverage is not possible. Value trade the good assets, meaning that you try to buy them as low as possible by accumulating entries on targeted levels. Just let the DOMs buy or sell in the short run. But anyhow and anyway, the supply is not there for everyone. So if you have the coins, that's great. If you've been trading futures contracts, well, good luck. You're gambling against the market makers. Okay? It's really that. Don't go leverage future trading or whatever. Just buy the real stuff and hold it. That's the story of it. Sorry about that. Okay, so trade smart in the meantime. Okay, I think cryptos are on the verge to short squeeze now, and yesterday's kind of bear session with the bullish underlying sentiment that we have, meaning that look at the sentiment, we truly have recovered, we're out of the riskier areas, so I don't see anything yesterday but just to try to panic move once again out of stupid news flow. I think the indices could go down, but I don't think cryptos will have to follow this time. Yesterday has been yet another of these days in which assets in indices go down and the cryptos go even lower, and very much have been oversold yesterday. I think this is the end of it. It's an appropriate time to finally show that there's no such a thing as a correlation between the stock market and the crypto market, because the stock market is a big liar. Most of the stock market has been hammered recently. Just a bit of it, the top 5 of the S&P 500, have been accumulating all that money. And if these guys start to bleed out, that doesn't mean the S&P 495 has to follow accordingly. But that still means the S&P 500 itself might head down. So pay attention to this. We've always made it clear. Indices don't tell the true story about asset valuations. Most of the assets have been oversold, specifically in targeted growth sectors like biotechs have been hammered, fintech as well. All of these things can rebound, and I definitely think that cryptos will rebound as well. So pay attention to momentum. Short squeeze is down the corner. It's not yet happened, so don't anticipate it, but be aware that when it happens, everyone will figure out that the bear market, so-called, wasn't such a thing, and everyone will try to look for all-time highs afterwards, but understand that there's not enough coins for everyone. That's the message, okay? So don't wait for this thing to happen to buy. If you wanted to buy with cash you've planned to invest. Don't buy with leverage, and don't buy with dollars in your eyes, okay? This is not a speculative gamble. This is a value trade that can take either a couple of days or a couple of weeks to play itself. But I would be very cautious with momentum, and don't even dare selling that market. If you think it's going too high too quick, well, think of what you were just thinking a few weeks from now when this thing was going too low for no reasons. These things are just mature ranges. We can go from support to resistance very quickly, and I tend to say that we should never have gone to the bottom, so we can very well retrace to the resistance very quickly now. So pay attention to this. It's a matter of market rhythm. It's kind of a music story out there. So let the music play. Just see through the problems. See through the value. Okay, we had crazy volatility, but the trends remains intact. This cannot be anything but a trending market. The contexts are far above the rising moving averages. So try to be smart. Try to see value out of random price action of the short-term speculative gambles. Okay. This probably will terminate itself with a massive short squeeze due to the reason that this doesn't mean the market is so bullish. It just means the market is not liquid enough. There is not enough coin for everyone. Okay, this is what's going to cause the short squeeze, not the speculators, not the market makers, just the fact that the bull trends are there and there are certainly not enough coins for everyone. Bye guys.